The story has been 3 interest rate cuts in America this year, and perhaps the same here, starting in November, maybe even earlier, according to some economists. Now they're not so certain. Our business editor, Ross Greenwood, is here to explain all of this. Ross, good morning. There's more evidence overnight. Rate cuts are further away.
Yeah, it feels a bit that way. It really does. And certainly after that inflation number came out of the United States higher than expected yesterday, again, this has really sort of raised questions about when the first rate cuts might come, not only in the United States, but in the rest of the world. But there is a line of thought here that if the United States does start to cut interest rates, the rest of the world, including Australia, will simply have to follow, regardless of where our economy is. And that might not be such good news in the fight against inflation. But overnight, the European Central Bank kept its key interest rate on hold at 4%. Yes, said Christine Lagarde, the chair of that organisation, it might be coming in the future, rate cuts, but don't hold your breath. Here's what she said.
If our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission were to further increase our confidence that inflation is converging to our target in a sustained manner, it would be appropriate to reduce the current level of monetary policy restriction.
Yeah, so somewhere out in the future, and probably after the United States has cut. But really what's taking place now is because these interest rate cuts are sometime further out in the distance, what you've seen is an increase in money market interest rates. So say, for example, in the United States, mortgage rates, which are based on long-term rates, well, they've actually started to rise back above 7%. So mortgage rates in America now starting to rise here. Now, this is one-year bond yields over the past year here in Australia. You can see, again, when inflation numbers come out, when things change around, these rates rock around all over the place. Now, the other thing also is true of the long-term government bonds. These are actually the government bond prices, not the yields. But again, it just shows the movement in those interest rates, short and long-term, based on the expectations of where the rates move. At the moment, though, the money market's really very much firmly saying that the first rate rises, particularly in the United States, are now further off than what was first anticipated.
That's all very depressing for those who have a mortgage, Ross. So we know now that some have changed their minds about rate cuts. So if perhaps not this year, what's it going to look like next year?
Well, that's going to be the interesting thing. But, the one thing about this is do bear in mind, though you might have a mortgage and though you might be cheering for rate cuts, the fact of the matter is what it needs for people to get a rate cut in Australia is for someone else to lose a job and for the economy to really slow down. And that's not a good thing for Australia as a whole. So you're going to be a little careful what you hope for. But if you're looking for rate cuts, then go to Bank of America, for example. They've stuck to their guns the whole time that there will be no rate cuts this year, but just have a listen to what they think might happen next year.
We think inflation will come down towards the RBA's target a little bit sooner than they think. But our view is that the RBA won't be cutting until next year. We think that they'll cut 5 times next year, though, and that they'll bring interest rates down to 3.1%.
Okay, so just a different one here to wrap, Ross. The Whyalla Steelworks has for years been a precarious business. Now its main blast furnace has shut down. 900 workers, again worried about their jobs.
Yeah, this is a really interesting story. Remember that Sanjeev Gupta, the bloke who owned Liberty and basically a big steel producer in Britain, he was tied up in the whole collapse of companies in the past that really sort of raised questions about his financing. Now, the one thing that's also a big issue is this is the blast furnace that's making the steel for the inland rail, which we now know is going pretty much nowhere. So what's happened is they tried to take the blast furnace down a couple of weeks ago for some maintenance, but effectively cooled the blast furnace according to reports. So as a result of that now, they're really potentially taking a long, long time to try and fix this. And this is a time when Sanjeev Gupta's own finances are already pretty sort of precarious. But then again, you've got another situation here, and that is the federal government in January this year basically gave $63 million to Sanjeev Gupta, who was really actually in the UK right now and Europe under some fraud investigations for actually moving monies between and around his companies, effectively to try and fix up these blast furnaces into the future in the promise that green steel will ultimately be made. So, as I say, right now the workers are very uncertain about their positions, basically because their blast furnace, for the time being at least, is not working.